Founder of crypto lender Celsius Network, Alex Mashinsky, arrested and charged with fraud. And basically, to put it quickly, this guy was running like a massive Ponzi scheme. Just like straight up Ponzi scheme. So Alex Mashinsky, the founder and former CEO of bankrupt cryptocurrency lender Celsius Network, was arrested and charged with fraud. A U.S. prosecutor in New York said Thursday while three federal regulatory agencies sued him and his company. Mashinsky, 57, was charged with 7 criminal counts, including securities fraud, commodities fraud, and wire fraud, and while Celsius' former chief revenue officer, Roni Cohen-Pavan, was charged with 4 criminal counts according to the indictment, which was unsealed on Thursday. Prosecutors and federal regulators accused Mashinsky of misleading customers and of artificially inflating the value of his Hoboken, New Jersey-based company's proprietary crypto token. Lawyers for Mashinsky and Associates did not immediately respond to requests for comment, and Cohen-Pavan's attorney could not immediately be reached. Mashinsky is one of the several crypto moguls to be indicted in another blow for the industry, which is undergoing a reckoning after a slump in crypto prices led to the collapse of several companies, including exchange giant FTX. Its founder, Sam Bankman-Fried, was charged with fraud last year and has pleaded not guilty. Whether it's old school fraud or some new school crypto scheme, it doesn't matter one bit. It's all fraud to us, U.S. Attorney Damian Williams said at a press conference detailing the charges. Mashinsky will appear before a U.S. magistrate judge in Manhattan on Thursday afternoon, Williams' office said. Now, also, the biggest issue that I see with a lot of these Ponzi schemes, specifically in crypto, which is why if you do end up getting into crypto in some form, be very careful, right? Only like put money either into like very like regulated companies, right? And then take it off of there and put it into like your own hardware wallet, meaning that you're basically keeping the money in your own wallet. Think about it like that. Like as if you had cash you stuck into your own wallet. That's the way that you got to view it if you want to get involved into crypto to like a serious level and not passively. You want to buy on an exchange and then quickly put that onto your own wallet so that you could just have access to it whenever, because that is basically the whole point of crypto. It's just something to really think about. But also the biggest issue with it is that when these things happen in terms of Ponzi schemes with crypto, you are pretty much never going to get the money back, right? It's not like a situation where you invested into a company and then potentially you are going to get money back because of like insurance, like securities insurance, all that kind of stuff, right? That's not really the same thing. With crypto, because it is so unregulated and your money can be transferred out of country like instantaneously, like within minutes, sometimes within seconds, depending on the crypto, you're pretty much never going to get that money again. So if you lost like $1 million into one of these exchanges or this lender or whatever, you're basically screwed. You are completely effed in terms of ever getting that money back. So founded in 2017, Celsius filed for Chapter 11 bankruptcy protection in July 2022, year after customers rushed to withdraw deposits as crypto prices fell, and many have been unable to access their funds. Crypto lenders such as Celsius grew rapidly as crypto prices surged during the COVID-19 pandemic, and they promised easy loan access and eye-popping interest rates to depositors, then lent out tokens to institutional investors, hoping to profit from the difference. Now, I've also heard that Celsius, what they were doing was like just blatantly pretty much like draining the funds from that account, like from the accounts, which is horrendous, right? So like say like investors were like, let's just say like investing $10 million a day. There's been talks that they were like literally just draining $10 million out of the whole company, right? Like out of all these people's accounts and just using it for whatever they were using it for. So Celsius was among the first in a series of bankruptcies in the cryptocurrency sector last year as token prices cratered amid rising interest rates and stubbornly high inflation. It filed for bankruptcy shortly after Singapore-based crypto hedge fund Three Arrows Capital and rival crypto lender Voyager Digital did the same. Mashinsky and Cohen-Povin were charged with market manipulation of the company's crypto token, known as CEL, as well as a fraudulent scheme to manipulate the price of the cryptocurrency and wire fraud related to the manipulation of the token, according to the indictment. And prosecutors allege Mashinsky also personally reaped approximately $42 million in proceeds from selling his holdings of the CEL token. And Williams said at the press conference that Cohen-Povin is located abroad and is an Israeli citizen, but declined to comment on whether the former Celsius executive would be extradited. The U.S. Securities and Exchange Commission (SEC) also sued Mashinsky and Celsius on Thursday, according to a court filing alleging he and his firm raised billions of dollars through the sale of unregistered crypto securities and misled investors about the financial state of the privately held company. The SEC, along with other regulators, which also filed lawsuits Thursday, accused Mashinsky and his company of touting Celsius as safe, akin to a traditional bank. Even as they took increasingly risky steps to deliver promised returns of as much as 17%, Celsius used emails with phrases like, "Pour yourself a cup of profits and profits in your pocket" to promote its interest-earning program. While the firm lost millions of dollars as customers raced to withdraw funds, Mashinsky and Celsius continued to claim the company was financially secure and had enough funds to meet withdrawals, regulators said. The SEC also said Celsius engaged in risky trading practices and made uncollateralized loans, despite telling investors that it did not. The company also falsely claimed to have raised $50 million from its initial token sale and claimed to have 1 million active users when in fact it only ever had around 500,000 depositors, many of whom were no longer active, the SEC said. The U.S. Commodity Futures Trading Commission and the Federal Trade Commission also sued Celsius and Mashinsky, and the FTC said it had reached a settlement with Celsius that it will permanently ban it from handling customers' assets. The Justice Department entered into a non-prosecution agreement with Celsius in which the company accepted responsibility for its role in the alleged schemes and pledged to continue cooperating with investigators, Williams said. And Thursday's lawsuits add to a series of challenges for Celsius Network and its founder. In January, New York State Attorney General sued Mashinsky, also alleging fraud. So basically what you could think about is like the company itself might actually somehow survive after all of this, but the founder is going to be punished pretty severely if they do end up getting extradited. So I just thought it was kind of interesting to check this out. Because like the main thing that you really got to understand, like crypto as a whole is a risky prospect, right? Now personally I have some money in crypto, but it's an amount of money that I literally just don't care about it, right? That's the way that I view crypto. It's like, okay, if you got some excess cash that you could live without, and instead of like buying like a lottery ticket or something, you go into crypto, right? Just for the fun of it, let's see what happens, all that sort of stuff, right? But I wouldn't put like a big bet or like a good amount of my money into something like this because it's just so risky, right? And even then, you could pretty much buy basically the top two cryptos, Bitcoin and Ethereum, and then put it onto a wallet and just literally never care about this whole stuff pretty much ever again, right? Because you could just have this stored on your own hardware wallet as if you had cash in your wallet. If you want to learn how to get a debt, go to 40inbox.com. Stay tuned for more financial commentary.